Hey guys, welcome back. Today we're going to be talking about Palantir stock. We're going to be looking at the fundamentals and the technicals. Palantir recently IPO'd about a week ago at the price of around $10 per share. Right now they're going at around $9. So you're kind of getting a discount here. It hasn't been performing that well actually. So I'll be doing that. I'm not a financial advisor, so don't take my advice. You do what you want to do. So we're going to be going through this document. I'm going to be pausing several times because this is an incredibly long document that they filed with the SEC. And yeah, we'll be going through it bit by bit. So I will see you in a moment. First, we're going to be going through the letter from the Chief Executive Officer, Alexander Karp. In this I'll just summarize it. In this letter, he basically explains what the goal of Palantir is, basically trying to create software, the best software for the United States, the allies around the world, especially like in the military sector. And they're also trying to create software for all kinds of big corporations for them to be able to analyze their data better than how they're doing it right now. Because most of the software they're using is kind of old, and Palantir is the cutting edge of that kind of software in the security and surveillance business. So yeah, they're just trying to create software platforms for big corporations, big government, and so they can use that and be able to extrapolate data as efficiently as possible. Furthermore, they explained that they're a company based in Silicon Valley, which obviously they are. It's a big tech company, and their CEO, as I said, was Alexander Karp, and the co-founder is Peter Thiel, who created PayPal with Elon Musk. So that is incredibly promising. They are reliable people, and I do think it is going to be an amazing company in the future. Next up, we're going to be going through the summary, and there's a summary for why you should buy Palantir stock. And so basically it's about them building software platforms, that they were founded in 2003 for a very good reason, because software was outdated. They wanted to do something about terrorism, and currently they have two principal software platforms, Palantir Gotham and Palantir Foundry. Gotham is their first software platform. Basically, they're creating a lot of software for security and for surveillance. And furthermore, they keep talking about how they're using it and how they're like applying it. And now, next to H1 2020, they have 125 customers. That is not a lot. That's like very little. But the thing is, those customers include the US government, which is massive, and in general are very big corporations and companies that require a lot of software, and so they also pay up a lot up front. Think about in the tens of millions. That's their customers, so that's why they're able to become so big, because their customers are so huge and they require so much software. So their software is also used in 36 industries and in more than 150 countries. And their total addressable market, which is going to be important, is approximately 119 billion across the commercial and government sectors. So they generate about 742.6 million, as you can see, in revenue 2019. It is reflecting an increase of 25% from their revenue in 2018, which is quite nice. It is not extreme like something like Tesla or something, but it's nice. It's not bad. And they earned $595 million in 2018. So in the first half year of 2020, they earned quite a lot of revenue, despite the fact that COVID was ramping around. They were growing at a rate of 50%. That is exactly like Tesla, because they are growing. Actually, this year, Tesla is growing even less than Palantir. But obviously, Palantir is a lot smaller than Tesla, so it's a bit, I guess that's a different situation. Now let's talk about losses. In 2019, they had a net loss of $579.6 million, or a net loss of $337 million, because there was a stock-based compensation package which they they gave out. So that is probably going to be a one-time thing. So you can see this also in H1 2020. Their net loss was only 164.7 million, or a net income of 17.2 million dollars when excluding stock-based compensation. So this stock compensation thing is actually hurting the stock right now, and I think this is going to be a temporary thing, and in the future they're going to be having profits. And in the media right now, everybody's saying, oh my god, they're not earning any profits, but they're not actually looking at why they're not earning it. They're not earning it because they're giving out stock-based compensation. When this stops, there is going to be a huge demand for Palantir. It's going to turn everything upside down, and it's just going to be absolutely crazy, I'm telling you. All right, so they're down from a loss of 280. So they're also decreasing their losses, and they're improving their operating results. It's been increasing everything, and in particular, their time decreasing everything has been lowered. Also, they are being more efficient with the number of upgrades they can manage across the installations. They have doubled from 20,000 per week in Q2 2019 to more than 41,000 in Q2 2020. So they're overall growing very fast. They're decreasing their costs. They would actually be profitable right now if it wasn't for stock-based compensation. And I believe the stock-based compensation is a one-time thing because of the IPO. They probably wanted to compensate before going through that IPO process. And yeah, that would be pretty logical, actually. Just, so it doesn't hurt the company after the IPO. All right, now we're going to be looking at the balance sheet. I'm not going to go too deep into this video because else I'll be doing this for like 30 minutes. Anyway, we're going to be looking at the revenue, the profit, the operating costs, etc. So in 2018, they had a revenue in that year of 595 million. That is quite nice. In 2019, it increased to 742 million. 2019, the 6 months, the last six months, it was 322 million, and in 2020, the 6 months was 481. So we just have to double that, and we'll have the number for 2020. Although Alexander Karp himself told us that he would be expecting revenue around 1 billion. So that is incredible, considering that they had a revenue of 742 million last year. So they are making a lot more money, and their gross profits has increased as well, considering that this is 6 months. This is 1 year. And yeah, that is more than half of this. So they might be able to hit a record there. And their operating expenses, as you can see here, has decreased significantly. And that is because they're building their software, and they don't have to create new software and be as intensive in that process every year. They just have to create it a couple, create the best software for a year or two, and then they can focus on marketing, and then they'll shift gears every now and then. But their costs are lowering substantially. They halve their costs for. Oh, wait, I'm seeing this wrong. This is 6 months, all right? So they still are lowering the costs, although their general and administrative costs are higher here. But yeah, they lower their costs pretty consistently. We see this right here as well. And I guess their net loss is pretty huge. As I said before, there is a lot of stock-based compensation, which should be fixed in the future. All right, let's go down here. Their cost of revenue has been decreasing, at least, well, it increased from 2018 to 2019, but that's also if you consider the fact that they have to use that marketing, and they're getting more revenue, so they might want to spend more. It did lower this year from 2019 to 2020. Total stock-based compensation expense has been lowered for 2020 so far, but this might go higher. This is probably a one-time thing because of the IPO. And this is their cash equivalents. They have a lot of cash on hand. It's $1.5 billion. This is in thousands, obviously. So it is looking good. They don't have a lot of debts either. They have like about 300 million in debt, and they have a lot of assets. They have a lot of cash, so it is looking very good for me. Their contribution margin has also been increasing every year, so that is looking pretty fine, especially considering the fact there's just COVID running around everywhere. So that's why you want to be invested in tech companies, because they are pretty resilient against these kind of catastrophes. All right, we're going to be looking at this graph. By the way, it's raining outside, so you might hear that in the background. So this is a revenue over time graph. This is like the best part of it, because as you can see, they have grown their first half of the year by 49%, and they're expecting to do the same with the second half of the year, which would mean they would have a bar of about 1 billion right here for 2020. And you can see that in 2008, they only had 2 million in revenue, and like 12 years later they have 1 billion. So that, like, if you consider that alone, that's a 500x. And obviously we're not going to be seeing a 500x in the coming 10 years, but if you just think about it, even if we just grow 50% per year, that is going to be insane, guys. Because just think about it, like 10 times 50%, and it's probably going to be cumulatively more than that. That is 500%. So this company could potentially go from this current about $20 billion market cap to $100 billion market cap. At least, like, that is the worst case scenario in about 2030. So that is very promising. I really like seeing that. Now let's go to the next graph. Here you can see the average revenue of the top 20 customers. And as I said before, they have like 125 customers. And usually the 80-20 rule applies, which means that 20% of the customers usually pay most of the revenue. This is the Pareto principle. And even here you can see 36% growth over H1 2019, which is fantastic. I do want to see their customer base to be larger than 125, just for the security, you know, because if anything happens and like 10 or 20 customers leave, their revenue could drop significantly. So if they start to be more commercial, that would be absolutely amazing. What's also nice to see is that they're spending more and more on research and development. And you see that as they have grown, their spending on R&D has increased substantially. Like 1.5 billion right now, and it used to be 10 million. So it's quite a lot of money that they're spending on research and development. And I think it is necessary to be the leader in this sector. If you don't spend that much, then you won't be able to create the best software, and you're not going to be competitive. All right, we're going to be looking at one more thing in this document. It's the government contracts, because they're getting a lot of money from the government. As you can see, in 2018, it was about $671 million that they got from the government, and the blue is exercised, gray is the contractual options. So the blue is the money that they actually have gotten, and the gray is that they will potentially gain. And it has been increasing until now, and it looks like it's going to be stagnating, because I believe they're going to be moving to a more commercial setting, because the government can only give them so much. I think if they go commercial, their addressable market will increase, and they'll be able to generate more income, and that would be a very good move. All right, we're going to be looking at the technical chart for Palantir. Obviously, there's not a lot of data out there, so there is not much to analyze. Although I want to say that this would be a resistance, which is going to be the highest point that it, came across, 11.4, and we can see a very clear support right there as well. Let me just draw that. Their support, obviously, guys, this is the 3-minute chart. There is not a lot of data, so that's the only way I can see a little bit of movement in the stock. I guess it's about $8.9 is a good support level. If you find yourself at that point when Palantir goes there, that is just a buying opportunity in my opinion, because as we said, there is a lot of growth potential in this stock. Like it could be a 100 billion, maybe a $200 billion company in the next 10 years. And yeah, that's quite amazing. Now I'll be drawing another resistance over here. It's right there. It's at the 9.5 level. You can clearly see that it bounced off of that level. Okay, there we go. It's 9.5. So 9.5 resistance, 8.9 is the support. It might move sideways for the coming days until Palantir releases any kind of news. I think if they release their earnings or anything positive, this stock could easily just go up to 11.4 and even go across that. Palantir is the type of stock that once it crosses a certain price point and hasn't gone below it for like a month or two, it's probably never going to go back there because they're so lowly valued, and they're like in the media right now, they're down talking Palantir like it's a terrible company. Their governance is terrible, and it's just being undervalued. As you can see in their RSI, they're looking pretty good, below neutral. It's going to the oversold territory, so it is definitely worth of a pick up. I myself, I've got some shares in Palantir, not a lot, about 40 shares, just in case. I do believe that they have a lot of good prospects and that the founders are key to the company and actually very reliable. As I said, Peter Thiel is the co-founder of PayPal, big buddy with Elon, and Alexander Karp is very charismatic. Actually, he's like one of those CEOs that's going to be the next Mark Zuckerberg, but then like his own version. Anyway, guys, this is what I've got for Palantir stock. If you want to see more videos about Palantir or just stock analyses in general, then please hit a like below. Comment what you think is going to be happening with Palantir, which stocks are you invested in, and guys, this was an honor. I will see you in the next video, which is probably going to be tomorrow. See you later, guys.